guys, and it's Oselemese Ejale here again, the host of Blackboard TV, where we discuss everything business management related to medium, small, and micro enterprises, MSMEs for short. So today the question is, are business plans still relevant in 2022? Are they old school? Do you still need them? And the answer to that question is yes, you do need business plans in 2022. This is because business plans generally are blueprints or instruction manuals that serve to direct you as the business owner from the point of I have this idea to the point of developing an idea into a full-fledged business. Now, I always tell my clients that there are two types of business plans, or rather, when clients come to meet me and say, "Oh, write a business plan for me," I always tell them who is the business plan for, and that now determines the kind of business plan that you want to draft. So there's the kind of business plan you need to serve as an instruction manual for yourself in directing your steps from I have this idea, I want to establish this kind of business, and I need some sort of instruction to guide my steps in that direction to establishing this business. And there's the second kind of business plan whereby you want to invite people into the business, you want to sell your business idea to them. Usually that kind of business plan, I always advise that you hire a consultant for that because it has to be like really, really elaborate, talking about industry analysis, competitive analysis, cash flow projection, break-even analysis, and all of that are required in that kind of business plan because it's really, really, really detailed. However, for those watching today, the first kind of business plan, which is the one that you need the general directions on getting to where you want to go as someone that has an idea and wants to establish a business, I'm going to teach you how to do that today. In this video, I will show you 6 easy steps on how to draft a business plan for yourself. If you have an idea, you have the money, but you just need instructions on how to move from point A to point B, this video is definitely for you. However, if you're in the second category and you need to write like a very, very elaborate and detailed business plan because you have a venture capitalist coming in, or you have that rich uncle or some investment banker or a regular banker, then you can hit me up with my email and we have a discussion about that. Or if you have a consultant around you that is very capable, you can hit him up because usually that kind of business plan needs some level of expertise. So without further ado, let's get right into it. So step number 1 in creating your business plan is company description. So company description basically covers all the various features that make up your company. So we start with what is your company name? What is your company location? The location has to be strategic to the business. You have to have a strategic advantage to your business. After that, you have your business philosophy. What is the driving force? What is the mental driving force behind your business? For instance, here at Blackboard Consulting, I provide management services to small, medium, and micro enterprises. That is why we do what we do in Blackboard, because we want entrepreneurs to succeed. And we discover that while most entrepreneurs have really, really great products, a lot of them lack managerial key concepts to run a sustainable business. Hence, the reason why we want to provide these managerial services to entrepreneurs in order for their businesses to succeed. This is our business philosophy. So having said that, we now have the mission and the vision statement. So the vision statement of your business is basically, what do I want to be when I grow up? That is to say, in the next 10 years as a business owner, when I grow up, what do I want to be? In the next 20 years, in the next 30 years, what do I want to be? And the mission statement is, how do I get there? What will I do? What are the philosophies? What are the mindset? What are the philosophies that will drive me to reach that particular point I want to be when I grow up? After this, we have the organizational structure. What is the organizational structure of this business you're about to set up? Is it going to be flat? That is to say, no too many power levels, just you and your many staff. Is it going to be hierarchical where you have the manager, the subordinate of the subordinate, that kind of thing? Or is it going to be a sales structure where you have several autonomous units that are semi-independent and they're just reporting back to you? So they are allowed to make decisions on their own. You give them targets and they meet the targets accordingly. So these are the various components that make up the company description. Oh, I almost forgot one very important one. What is going to be the ownership structure or the legal structure? So the 3 most popular are usually sole proprietorship, partnership, and limited liability. So for sole proprietorship, as the name implies, it's just you and your business. The advantage is that you make all the decisions you want. The disadvantage is that you and the business are one. So if tomorrow there's a default in the business fails to meet its maybe obligation in terms of a loan, or something happened and the business, people are asking for a refund, you as the business owner are one and the same with the business. So they can take your personal possessions as a form of what's that word now? To liquidate that debt that your business owes. They can take your car, they can take your personal property, because you and the business are one. So this is the disadvantage of sole proprietorship. Then the next one is partnership. With partnership, you share the risk. More people coming in, the less the risk affects each individual. However, it's the same way as you're sharing the risk, you're sharing the reward. So that's the disadvantage and the advantage of a partnership. Whereas a limited liability, the beauty of it is that you and the business are separate. So the business can sue and be sued without affecting you, who's the majority shareholder. And at the same time, limited liability always gives you room to raise more capital, because you can sell shares and bring in more people into the business. You can even create more shares, as the case may be. So all of these I just mentioned are the things that come together to form the company description. So I'll start again from the beginning. The company name, the company location, business philosophy, mission statement, vision statement, organizational structure, and the ownership or legal structure. So there's this other part that I didn't know whether or not I should mention it. However, it's usually not relevant for this kind of business plan where you are writing just to give yourself instructions on how to get from point A to point B. It's usually more relevant for the business plans that are trying to invite in bankers, investors, venture capitalists, and whatever. So this last part is where you talk about the qualifications of the MD or whoever is going to be running the business. What is their experience, whether it's on paper or working in that particular industry that this business is going to be. Yes, so these are what come together to form the company description of the business plan. So now that that's done, let's move over to the next bit. So the next one now is your product description. So a product I define as a unit of value that is exchanged for money. And that is to say, I am giving you this unit of value and you are paying me this amount of money in return. So for the product description, it usually comes in form of 3 questions that should be answered. What are we selling? That is to say, what is the unit of value that we are providing for the customer? Who are we selling it to? Who are the customers that want to buy this unit of value, that want to purchase this unit of value? And the third one is, why should they buy from us? Usually this is where you use a value proposition map. With a value proposition map, you have your gain creators, pain relievers, and the customer jobs. That is to say, your gain creators as a product is what is a customer going to gain by buying your product. So let me come again. Gain creators is what is the customer going to gain by buying your particular product. The pain reliever is what is the stress that the customer is currently experiencing that your product is going to address. And the third one is customer job. What is the functional benefit that your product is going to provide to the customer? So let me explain. Let's assume your product is a phone. The gain creator could be, by using our phone, you have the best camera quality, you have the best display quality. And then the pain reliever could be, okay, do you know what? We understand that people in this particular area do not have power. Power is a problem. So because of that, we're going to create a phone that has a 10,000 mAh battery. That's to say, it doesn't run down. You can press the phone all day and it all just be 50% that has gone off. So that could be a pain reliever, because you understand that one of the pains your customers are going through is that a lot of time when they're using their phone, the battery dies out on them. So even if they have, they have power, they cannot afford to start carrying their power bank all over the place. So they want a phone that the battery lasts longer. So the pain reliever now will now be creating a product that has a battery, a very long extended battery life. So that could be a pain reliever. Then the customer job in the value proposition map has to do with what is the functional benefit of your phone, which is to make call. It will defeat the purpose if you make a phone that has the best display, best camera, long battery life, and you cannot make and receive calls with the phone. So the phone has to satisfy the primary objective for which it was created, which is to make and answer, to make calls, to receive phone calls. So, having said that, you've successfully described your products. That's to say, what are we selling, who are we selling it to, and why should they buy from us? So now that we've done that, over to the next step, which is our market description. So, market description. Under the market description, we first define what a market is. A market is a place where exchange takes place. I'm giving you this unit of value and you're paying me money. So the product we described earlier, the market is where we exchange, that unit of value for money. Now it can either be physical market or it could be a virtual market. The physical market, like the name implies, is a brick and mortar store where they walk in and they pick up the product, while a virtual market is something like an Instagram or e-commerce website. Now, when you've described the market, remember, everything has to have a strategic advantage to your business. Why are you choosing the market you are choosing to deal with? So when you identify the market that you want to do business in, whether it's virtual or physical, you now have to outline the reason why you chose that particular market. What is the strategic benefit of this market to your business? Having described the market, the next step will now be, okay, who are the guys you are going to do business with in this market? Then you talk about your customer profile. Customer profile is what is the physical and psychological makeup of the person you want to be doing business with. So within the customer profile, we have the psychographic and demographic variables. The psychographics usually what to talk about the behavioral description of your customers. That is where we have attitude, interest, and opinions. What are their attitudes? Attitudes are the predisposition of somebody to act this or that way towards a certain external stimuli. So let me go again. Attitude is a predisposition to act favorably or unfavorably or this way or that way towards an external stimuli. So what are their attitudes? What are they interested in? What are their opinions? Under opinions, you talk about, that's why we have religious, cultural, social, or social-cultural, biases, and all of that. So what is the culture of the people within this market you want to do business with? And not just the culture of the people that you want to buy your product within this market. So you have to narrow it down. Now for the demographic, that is where you have the physical description of your customers. That's to say their age, their sex, their job, their income levels, and all of that. So when you're talking about the customer profile, you have to deal with the demographic and the psychographic variables of your customers. That's now make up their customer profile. Then after that, you now have what we call the serviceable, obtainable market. So under market levels, you have total addressable market, you have serviceable addressable market, then you have serviceable obtainable market. So with the serviceable obtainable market, this is the market you can actually obtain. So let me explain. Sometimes you tell somebody wants to sell you, you're a shoe vendor, you want to start a shoe business, and you now say that the total consumption of shoe last year was 1 million or 5 million or 6 million nationwide. Then on the basis of that, they're drafting your business plan. That's a mistake, because first and foremost, even if you are a monopoly, can you afford to service the entire nation of 5 million pairs of shoes? You cannot. You understand? So the serviceable obtainable market, I skipped some because it's not relevant to our discussion. That is serviceable addressable market. But the serviceable obtainable market is the aspect of the market that you can actually obtain based on your capacity. Okay, at my capacity, I can afford to sell 100 pairs of shoes every month. And this is the market that I know can afford to take in 100 pairs of shoes. That is the serviceable addressable market. That is the size of the market that can afford to absorb your product. So you now describe your serviceable obtainable market. Okay, within this particular location, I can afford to service these guys. This is the market I can afford to service based on my capability as a business owner. So let's go again. First of all, we describe what the market was. Then we talk about the customer profile. Who are those in this market you're going to be targeting? You understand? We describe them with psychographic variables, which is attitude, interest, and opinions. We describe them with demographic variables, which is the physical features, age, sex, work, income, and all of that. Then after that, we'll now describe the serviceable obtainable market. That's to say, this market we describe now, how much of this market can we actually service based on our capability as a business owner? So having done all of this, you've successfully done your market description of your business plan. So now it's to move over to the next bit. So having discussed the market description, the next part now is the marketing plan. So the marketing plan is the part 2 of the market description, and it talks about how am I going to sell this product. It is derived from the serviceable obtainable market, because it is from your serviceable obtainable market that you now know how much product you can actually sell in the marketplace. Because it doesn't make sense if you go and do a nationwide campaign, whereas you cannot service one local government. You understand? So you restrict your marketing campaign to the market you feel you can obtain based on your capability. You understand? Now, having done that, you now have what we call a visibility plan. How is my product going to be visible to the general public? How are they going to see it? Will I promote it on Instagram? Will I have a billboard? Will I have banner? Will I share flyers? So that's the visibility plan. Then the next bit now is how will they obtain this product? Because this part is quite interesting, because it doesn't make sense when you go around marketing a product. Then when it's time for them to buy it, it becomes like, become very cryptic, it becomes very difficult. They don't know where to pay, they don't know how to obtain it, even when they pay, they don't know how to pick it up. So, when you are doing your marketing plan, after drafting your visibility plan, you have to draft how they're going to see your particular product. Now, with marketing plans, I usually don't encourage people to go to the internet to go and pick up like a marketing plan template, because marketing is very, very fluid and it changes from, one area to another. However, once you have your customer profile and you already have your visibility plan should be based on your customer profile. Then you draft your how they're going to pick up your product, then you can run your marketing plan. I always advise that when you are doing your marketing plan, you should have what we call KPIs, that is to say key performance indicators. When you implement a marketing strategy, what are those indicators that you use to know that this marketing strategy is working? For some people, it is sales. For some people, it is walking customers. For some people, it is phone calls. For some people, it's impressions. For some people, it's page visits. So once you have your KPI, then you know that, okay, this marketing plan worked. Move over to this next phase. Or if it did not work, you now go back and ask yourself, what did you do wrong? So let's go over the marketing plan again. The marketing plan, first of all, visibility plan. The next second one is you draft your visibility plan based on your serviceable obtainable market. The third one is you set KPIs to know that, okay, this marketing plan is working. And the fourth one is you set up a plan on how they're going to obtain this product. Are they going to walk in to your store to pick it up, or are you going to deliver it to them in their houses? So having said this, the marketing plan and product and market description, we are done with that bit, and I'm moving over to the next part, which is your team building. So your team and your organizational structure talks about who are the guys you need to set up your business. What are going to be their qualifications? What will be their remuneration? That's to say, how much will you pay them? Would they need experience? Would they need paper qualification? Then you also set up your organizational structure. Remember, in the company description, we talked about our organizational structure. So having identified the one you want to use and you've elaborated it on your business plan, then in your team and organizational structure, you now, further draft out, okay, the various roles will be occupied by people that are holding such and such position. Okay, the manager will be tasked with the role of doing X, Y, Z. The supervisor will be tasked with the role of doing X, Y, Z. The clerk will be tasked with the role of doing X, Y, Z. This is going to be the qualification of the clerk, and this is what we're going to pay the clerk for doing this job. That is all for the team and management structure of the business plan. So over to the sixth and last part, but definitely not the least, is the capital outlay and sales forecast. I joined them together because they are all about financials when we talk about the business plan. So with the capital outlay, what it does is it addresses the amount of money you need to bring together to set up this business. How much to rent shop, how much to buy equipment, how much to recruit staff. And I always advise that you set up everything based on annual. So for instance, now when you are setting up the business, if you must start with a staff, have the staff salary for the next 6 months. If you can afford 1 year, it should be part of your business plan. If you are going to rent a shop, have the year's rent as well. If possible, do 2 years. That should be part of your your capital outlay. So let me go again. The salary you're going to pay, it should be part of your capital outlay at least for the first 6 months, minimum 6 months. Then your rent, you should get at least a year. If you can get 2 years, better. Then as well as the equipment and all of the other stuff that you need to settle the business in terms of financially. So having discussed the capital outlay, the last bit is the sales forecast. So the sales forecast basically is where you estimate your future sales and your future revenue, cost of sales, operating expenses, and all of that. So it's basically made up of estimates because the business hasn't started. And this is typically done on an Excel sheet. But for the sake of teaching and all of that, I have scribbled something because you will get an illustration. So this is not part of it, although I will resolve that equation so you understand what that means. So in this sales forecast now, you have 20 million as our revenue, cost of sales 10 million, gross profit 10 million, rent 2 million, salary 1 million, marketing 1 million, miscellaneous 1 million, our total operating expense 5 million, and our estimated profit in the future is 5 million. Another thing that the sales forecast helps you to do, it tells you the minimum units that you're going to sell in order for you to stay afloat as a business. So if you look at this place here, you see that the selling price per unit is 50, the cost of an item is 25, and the gain we're going to make on the sale of one item is 25. Now, if you divide your total expenses by 25, which is the gain on an item, what you get is 200,000 units. So what this means is that in order for you to stay in business, you have to sell a minimum of 200,000 units. But obviously, you didn't start business to just come and be paying expenses. You started business to make a profit. So that means you have to sell 200,000 plus in order for you to make a profit. That's to say, anything you sell above 200,000 units becomes an addition to you. So, or rather, it becomes a profit to you. So, the beauty of this is that it helps you strengthen the marketing plan and helps you set a target for your marketing plan. So you might have set a target for your marketing plan earlier on, but when you now go to this business, then you did your sales forecast, it's called that marketing plan, I need to up the figure I am hoping to sell in order for me to stay afloat in business. So this is the sales forecast, and this is the last and final bit of creating a simple business plan that will give you direction on how to set up your business for yourself. So there it is, the 6 easy steps to setting up a business plan for yourself. I would like to also point out that the business plan is not an end, it is just the beginning. And most times after writing the business plan, I always advise that people have a project plan. So a project plan doesn't need to be, overly elaborate. It's just an action plan that tells you, okay, having drafted this business plan document, how do I implement this business plan? Because business plan at the end of the day is just an instruction manual, it's just a blueprint. You need an action plan to bring all that you've written into reality, and that is where the project plan comes into play. And in my next video, I will discuss easy ways to set up a project plan for your business. But until then, my name remains Oselomesi Ijale, or Ose for short, or you can call me Chris, the host of Blackboard TV, founder of Blackboard Management Consulting. And you can reach out to me down below. My contact details that are there. You can drop a comment and I will answer your comment in the comment section. And don't forget to like and subscribe. So do have a lovely day and God bless.